Hello and welcome to Basic Trading for Cryptocurrency Markets. As I said last week, Binance isn't specifically doing this for us. It's something we as the Binance Angels just decided to do in South Africa so that we can create engagement and also help clear up all the myths around trading. And for the people that don't understand trading, who are new to trading and just dabbled in crypto, spend some time, get to know what's happening around here. First, the disclaimer is we are not offering any advice in what to trade and how to trade it. It's more trading as a whole that we are covering. Crypto is a very high risk investment, and trading on margin carries a high level of risk. If you don't understand margin, stay away from it. You're quite capable of trading crypto on spot and with less risk for loss. Please read through the disclaimer, and ultimately you are responsible for every trade you take. I am just using this for educational purposes, and hopefully you can learn from that and make your own decisions. Now, I wanted to recap last week very quickly, and I went through saying what is a market made up of. There's buyers, there's sellers. In crypto, there's hodlers, and in general markets, there's market makers or liquidity providers. To understand in trading that you have to deal with a few market players, the first thing in the crypto sphere is miners, whales, exchanges, funds, some institutions, and of course us retail traders. Now, miners have to sell their crypto in order to cover the expenses, so they have to convert to fiat or cash or whatever you want to call it. And these are things that one must keep in mind, that especially after the halving, miners have sort of kept onto their Bitcoin for a while, but now we can start seeing the inflows into the exchanges, which is probably why we're seeing some drops lately. We will get to those type of discussions at a later stage. But crypto can be quite confusing, and trading in general is not easy. So where do we start? It gives us headaches. So how the what do you call it, nuts and bolts of a markets work is that there's buyers, there's sellers, and there's a matching engine essentially. And it works very simply, like we're going to do something in real life. I want to sell an iPhone. I want 7,000 Rand for that iPhone. I advertise I want to sell it at 7,000. Somebody agrees. They come, they give me 7,000. They get the iPhone. And that's pretty much how a trade works in a market, is that we're trying to match people who agree on the price. And in between all of that is where trading happens. Now we can go and make millions, right? So the process of trading might be simple, but it's not easy to be profitable and make money out of it all the time. You need to define an edge for yourself. And what you learn along the way is that there's a thing or an element called smart money. And these are people that move the market or know what they're going to do in the market and what they want from it. So it's easier to study how they do things, and generally we look at charts and we see the result of their moves. How do we win though? It certainly is possible. And one thing one has to learn about the trading side of the world is that it works very different to the real world. In the real world, you study, you work hard, and you do the necessary that, or even the bare basics, and you sort of succeed in life and you get paid for doing something. Trading is not like that. It doesn't care that you've spent hundreds of hours looking at the charts. If you trade it the wrong way, you lose. And many people can't stomach that. The first thing that we have to learn is discipline. I know it's a swear word, but it is necessary if you're going to trade because the markets don't have defined boundaries. You have to define boundaries for yourself while trading. Patience, another swear word. We have to be patient because the market won't always behave like we want it to. You have to be open minded and less dogmatic in your thinking. I suppose a synonym for that would be probabilistic. That's it. You have to think in terms of probabilities. Last week we went to a chart, and I'm just going to zip through that. We did basic price action. I showed you what support is, what resistance is, how to draw trend lines, and how to look at different time frames. We will get to a chart later. I just want to go through a few things we covered last week. We did price action on charts. How to gain an edge in trading is more of an overarching point of view. It's going to be quite a few times that we're going to revert to that statement and use the information collectively. So you won't gain an edge in one or two sessions. You have to look at all the sessions and work out something that works according to your personality. All that I show you is about trading in general, not necessarily just for cryptocurrency. There are certain behaviors that cryptocurrency has, but it applies to trading in general. Today, we wanted to focus on technical analysis. Now, technical analysis is quite a debated topic within the trading world. Some people don't believe in it at all. Some people exclusively trade on technical analysis. And let's just look at the textbook definition. Essentially, it's a financial analysis that uses patterns in market data to identify trends and make predictions. Translate technical analysis is equal to voodoo. Haha, not really. And I'm sure I mentioned this last week, but I will couple next to technical analysis, you need to look at human psychology. So in the series Ozark, Marty Bird basically explains to the Fed agent that in a casino, an individual is impossible to predict. It literally is impossible to predict what they will do. But as soon as you start to scale it up to more people and more than 100, more than 1,000, let's say 100,000 or even a million, people tend to act in predictive ways, which is basically called herd behavior. And that is extremely predictable. We see this in market behavior all the time. And therefore, we see patterns, not because the patterns make things happen, it's because people do the same things when they're in a collective. They tend to lose that individuality and tend to follow the herd, if you want to put it that way. And if we can study that behavior, we can make predictive decisions around that. So these are the most common patterns. And in the trading world, we'll obviously see they give suggestions of how to trade these things, but bear in mind that this is just what we'll see commonly within the charts. Take a look at them. Some of them are bullish and some of them are bearish. And these patterns, they don't always appear perfect within in a market, but we can see them from time to time, and they're definitely more valid as we go to higher time frames. One of the big things we'll come to is technical indicators. It's a very broad area because a lot of people do their own proprietary stuff, and they definitely come down to three sort of broad categories. And there are a lot to cover, and they can't be done in one session. And We're not going to be showing you how to use them now. I will show them what they look like and possibly talk about it. And essentially, they show what the market structure is, either the trend or whether the market's consolidating. Consolidating means a band of area that is small and there's not much movement. Does TA work? Well, as I described earlier, when you're dealing with a collective herd, it's easier to see patterns and see predictive ways of how humans behave. Many have claimed technical analysis to be a self fulfilling prophecy, and to a degree it is, because if more people use the same things, it will become valid. It's very similar to the concept of money, because as we all know, actual fiat money, paper money, doesn't hold any specific value, but it holds a value based on our belief in it. And the more people that believe and trust in that, the more valid it is. Sorry if I burst the bubble there, but yeah. Once again, smart money comes up here. And this is people who know what they're doing before other people do. And in the case of markets, it's those that just have more or smarter because they watched other things and they can take advantage of certain actions. Whenever you're trading, you should always think, what is the smart money doing? So the categories of the technical indicators come down to trend as the main thing. One of the most common indicators in the trend category is moving averages and the MACD, also the parabolic SR. These are common to most trading platforms, and they normally will have them. Another concept in the markets is momentum, and this is just strength, underlying strength in the market. And the way we can measure that is stochastic oscillator, the RSI, relative strength index, the CCI, the commodity channel index. Then, and in the Bitcoin world, we'll know about volatility, but there's an area called volatility indicators, which refer to things like Bollinger Bands, average true range, standard deviations, which all work out to, I would say, sum it up in saying that the difference between the opening price and the closing price in a day and what that size between that can be. So Bitcoin can easily move 20% of it or 30% of its value in a day, which is huge moves versus currency markets, which will move 1% and it will be news. Obviously, if that's going too fast, you must let me know. And for now, we'll go to a chart. So I'm going to take it to an older platform simply because the charting allows me to put more indicators on so we can discuss better. For all intents and purposes, this is Bitcoin, but it's a CFD version of it and it's in MetaTrader 5. First thing I wanted to show was the moving average. So we're going to add a moving average. The most commonly used one, I wouldn't say the common one, in institutional side of things is the 200 moving average EMA, exponential there. And I made it a slightly thicker line so we can see it. Might as well make this picture black rather so we can see better. So we want color on white. No, black and white. Background we want black. Foreground we want white. And then I want to change my bar up to be blue. Power down to be red. Sorry, I just like this way rather. Just helps me to be consistent wherever I go. And we find to change it. At least we can see the yellow better. Then the other most common moving average is the 50. We will then make that blue. Okay. So every time the 50 crosses the 200 is what they call a golden cross. But it's sort of a big deal on the higher time frames. Doesn't often happen. And see, Bitcoin can often kill you like that. But moving averages are definitely based on the past. They're definitely not predictive. Sorry, this thing is fighting with me. Let's rename that into the chart so that we get. And moving average is really just taking, if this is 50, then it means it's taking an average of 50 candles at a time. If it's daily, that means 50 days at a time. It's making calculations. If we go to the hourly, it's taking 50 hourly candles and averaging it. People, like I say, 200 MA is very commonly used. So its price is always going to respect it in some way. And even here, you can see it just literally just stopped midway there, did a little bounce, and then ultimately just didn't respect it anymore. Ultimately, it's just so that you, at a quick glance, can see that's the trend. And as you can see, there's a slant down. So we assume that this is ultimately a downtrend. Let's go to the 4 hour. It paints a different picture. Daily, all over the place. And we go higher up, we can see sometimes in terms of the weekly, we really not in a downtrend, but the, you'd have to wait years, sometimes months. So I wouldn't necessarily suggest that weekly is the best chart to trade off of in Bitcoin, and certainly not in the MetaTrader platform. But let's go back to an hourly. So our next indicator was the MACD. So I'm just going to get rid of this moving averages. See, the common MACD is always there. And you'll see they also use a moving average. So the fast EMA says 12, slower EMA is 26. We can change that, but these are the common things. And the MACD itself, the histogram is a 9 period. So if we just add that, you'll see it come up. What this can also tell us is what they call divergence. So the easiest way to explain divergence is simply when price is doing something and the indicator is telling us something different. Usually you can use the RSI also. So let's put the RSI there. And we see the same behavior. So let's just throw, you know, every little program has its own issues. So we definitely see up, up, but here we see down. So if we take the edges, and I tend to ignore wicks, especially in the MetaTrader. So when price is going lower, but we're seeing this pointing higher, that's exactly what they call bullish divergence. So it's saying, look here, the strength of the market is actually weakening in terms of the direction that it's going. And it's possibly a time that it will either correct. So if it's in a downtrend, we'll expect some sort of up move. It doesn't necessarily mean the downtrend is changing. But if you're like me, a lot of my trades are these type of trades, just that section there, because all I'm interested in is I know that it's coming down, but I can't always get in at the right time, depending on whether I'm trading or not. So I like these counter little moves, and divergence is a very good way to. And it's not always that it's this picture perfect, if you want to put it that way. But if you can determine trend beforehand, and it's generally better to say, let's say we start on the daily or the 4 hour and say we see a downtrend, then we start looking for entries as we go lower. Anyway, I wasn't meaning to get into how to trade it. It was just simply to look at what they look like. Go into the indicator list and just delete. I delete that as well. If we then go to the momentum indicator, we'll see the stochastic oscillators. Now these can really kill you if you start to understand what these things do. So they were stock indicators. They were never meant for fast moving markets like crypto and even forex. So one needs to know what they're actually talking about. And the stochastic ultimately, because it's measuring momentum, is trying to determine turnarounds in the market. So if we are expecting reversals, then surely when I hit the top area, it's going to turn around and come down. And when it hits the bottom, it's going to turn around and go up. And as you can see, that is a muted move versus that type of move there. And that's not really how to use the stochastic as a standalone, if you want to put it that way. It's really just to look at the whole picture. So when we picturing a large support area, and last week we did price action, just make that a different color. Okay. We can leave it red. I just want it thicker so I can see. And let's say we were in a massive uptrend and we hit a huge resistance area, something like 9.6, which wasn't broken this week. We then look at all the tops here. And we see it touches a few times. So in this area, they call what they call overbought, and in this case, oversold. And that just means we're looking for exhaustion in the move. So we got a big move up, and we're seeing goes above the line, comes down, goes above the line, goes above the line, and it's not breaking up, which means that there's probably an exhaustion in the buying side of likely to go and change direction, which eventually it does. And then we see it just quickly zip down. And you can see when it zips down like that, it tracks it and gets there, but then it starts to do this. And we'll see prices also starting to meander here, but just a viewpoint, not necessarily something that standalone. Just delete that. Trying to remember the last. I'm really getting old. We already put the RSI on, and the CCI, which is nothing fancy, honestly. It's just a line similar to, and I'm going to say just ignore that one. Then moving on to volatility indicators, the most popular one obviously is the Bollinger Band. It's really normally up here somewhere. Okay, so they have what you call the mean, which is the center, and we have one deviation up and one deviation down. Normally we can edit that. No, I'm pretty sure we can add another. There we go, 3. Forget you have to do negative and positive, so add -3. Get a better view. Sorry, I'm on a PPS here because I'm working on a Mac, so it's the only way I can get to see these things. So it looks very squiggly, and ultimately what we're looking for once again is overextendedness in the market. And reasons why we would want to see what is happening is that when price stays within the inside bands, we want it to suddenly expand, because this is not telling us which direction it wants to go. When it breaks out like that, normally what they're looking at is if we hit a resistance area there once again. Yeah, we've got a resistance area here, and we see the deviations outside start to expand like that, it means that price is on the move again. We always expect it to return to the mean at some time. So you'll see it follows down here and suddenly we're back at the mean or center line. Same here. In and out, in and out, in and out. Suddenly up, down, move back at the center line. It's not the prettiest of indicators, but it has saved many people. You just need to know how to use it properly. Anyway, I'm going to delete that. I'm not sure if you see my sort of process of trading always tends to be more linear than it is flowy. I like support and resistance, and I use it because for me it works mostly. Just need to get back to my indicators and just remember where it is. Okay, not that. Good. That is pretty much it from the. There's a few others like price channels that's decent. The problem with these things is that you need to learn it along the way, and it's not always like finally I can move the thing out of the way. It's not always that you understand what the indicator is trying to tell you. And it really is just based on the price at the end of the day. And I would assume that in this price channel that we're looking for extended moves up, top of channel, and we want to do it down. Obviously, at some point it will correct again. But I wouldn't say I use that one. Still, I think the best thing that we can do for ourselves is just go to an extremely zoomed out approach, look at areas where price seems to respect. We draw in our lines, and we can do this any time frame. But it's best to start at a higher one and go down. So we just see areas. Sorry, I'm trying to move it while talking. And if we go higher time frame, we'll start to see that did respect that at different areas here. There was a touch. Yeah, there we have touches. Just area of price congregating around somewhere. See the price reverse there. We see there again it reverses there. Try to reach there, didn't make it. And we can start to paint a picture for ourselves. Obviously, most of this year we moved up. And the rule of trend lines, they have to have 2 or 3 touches. Sometimes you get these wicks under there that just obviously can't make the trend line work. But as you can see, for the most time, it did respect it. And we're now sitting at this contentious area of 9,300, which it broke earlier today, but we find ourselves back up again, which either means that we're going to continue up again or the market is deciding what to do. That really is it for today's session. Thank you for being here and for viewing these things. And hopefully next week I might do an early morning session. I'll interchange between the time. It's sometimes better to have more people on call because they can ask questions. I will post this on YouTube as soon as I can. Thank you.